Alright everyone, here we are with another video with Invest for tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button, and if it's your first time here, do not forget to hit that subscribe button and click on that notification bell so you don't miss a single video and you're up to date on our chart analysis here with 42 Vision. So here I have pulled up the SPY, SPY, the S&P 500 index ETF that tracks the S&P 500, and the overall SPY has been turbulent, right? But for most of the year, it has been going downwards. And when you see headlines like this stating S&P 500 finishes off worst first half of the year in any year since 1970, and you see a lot of different analysts giving price targets to the downside. Now, I'm going to go ahead and share with you guys my personal opinion, not financial advice, my perspective. I could be completely wrong, but based off what 42 Vision is showing and what the charts are showing, we're going to break it down in today's video. Some key levels that I'm watching, and within this volatility, what is it that I'm doing? But before we break it down, I want to share with you guys one of the home run opportunities that was mentioned over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with 42 Vision and getting connected over to our bots, check out the link down below in the description to the Discord and getting connected to the 42 Vision indicators and becoming part of a growing community of investors all looking to learn and grow together. So the stocks I mentioned this morning gave realistic expectations of 5 to 10%, 10% plus, but our home run of the day was from our SPY bot. Our SPY bot sent out a bull indicator from 1:40 p.m. and from that moment forward, call options went up into power hour and into the close 50% plus, guys, within just hours at their highest points of possibility. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, and as you guys saw, the home run of the day was from our SPY bot, and it sent out that bull indicator based off the 5-minute into the close, and call options went up nearly 50% plus at their highest points of possibility. So the SPY here is sitting sideways after pulling downward since June 27th, and things are here fighting to find a support, right? So I'm going to go ahead and pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator, getting connected to our SPY bot, our QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources, maximizing in either direction by receiving this clarity and edge over the charts. And we now have a new indicator that was once limited time offer now available to all, and I'm going to do technical analysis with it in our videos, and it is the Inflow versus Outflow, as you can see right down here. We're going to break it down and use it in today's video. So here we have the SPY with a bear indicator on the 30-minute in the middle of the day. Things started to come back up, and a bull indicator as an extra layer of confirmation towards the end of the day. And you could see in this consolidation how the outflows were outweighing right there on the 30-minute, and things shifted from red to green, having some strength. But where the real momentum started was once everything started to pull away from the midway point right there. You could see that move on the chart, and same thing as well. So once the midway point is broken through and outflows are now losing steam and the inflows are dominating the chart, you will see it reflect in the charts. And same thing when outflows dominate, you'll see it reflect in the charts to the downside, right? If I put this on a lower time frame as an example for the 5-minute, you could see how things were very volatile at the beginning of the day. It went ahead and shifted from green to red, broke through the midway point, and things continued downwards until it found a bottom, hit that dip area on 42 Vision, brought itself back up, and then consolidation for most of the day, fighting between the inflows and the outflows, the bulls and the bears, until it finally broke out, pulled away from that midway point, held itself in that upward trend, and you got that bull indicator and strength on the chart. That's the goal with 42 vision. That's the goal with inflow versus outflow, to add that extra layer of confirmation, whether you're a day trader, swing trader, long-term trader, or even a scalper, right? Opportunities for everyone with the clarity and edge that it brings. And you're going to see how even on larger time frames, the inflow versus outflow is great to be able to analyze charts in the bigger picture and within the volatility, also to maximize within the moves. So when you look at the SPY, the low so far of the year was 362, right? And right now it's in the 380s, and it broke away from the 370s. Now, this is the 30-minute. We have different headlines coming out, like I showed you guys earlier in the video. S&P 500 finishes off worst first half of the year, of any year since 1970. And then you also have here the S&P 500 ends brutal first half of 2022 with the largest percentage loss since 1970. So everybody's referring back to the 70s. So they want every single investor, or at least they're trying to compare it to something in the past, which is back to how the stock market reacted in the 70s. I guess that's what they're trying to do, and that's what they're trying to actually compare it to. Now they also have 1994, we have the dot-com bubble, and the 2007 to 2009 crash. So we have different sources and time frames to compare to, but this is the largest and most brutal first half in a year, right? The first half of a year since 1970, which is nearly 40 years plus ago, right? Now, when you go over here to this article, it states here the S&P 500 trading down to 3,200 is very attainable, strategists say. Now, we are talking about this in not just this video, but even in previous videos, how 3,600 was a key level even before all of this happened, okay? We would talk about how 36 was a key level, right? 3,600 or 360 in the SPY's pricing. Now, 320 or 3,200 on the SPY is pretty bearish. Now, is it possible? Well, anything's possible. Now, how is it going to happen? It's not going to happen in a straight shot, and that's why we need to talk about key levels here, because we've been covering how on the 1 week and even on the 1 day since the first bear indicator at the beginning of the year popped up, we were watching this closely, and things continue to pull back. Now, inflow versus outflow, the outflows were outweighing, right? It went through the midway point. It was red. It continued until it final bottom and reversed from red to green. And you could see that slight little bounce there. And it was a short-lived one. And it pulled back down again. Did the same thing. And then here we are in this big pullback ever since this red right here. And outflows were then shortly crossed. It got that bear indicator, and the continuation happened in a very short-lived bounce right here again. Still under a bear indicator, and things went right back down. But that isn't the only thing, right? The bear indicator that popped up on the 1 day, we first started watching it. But once it popped up on the 1 week, I did coverage on this for multiple days and months and weeks. And that bear indicator popped up towards the end of January, and things tried to come back up. And then they went down even lower, and the outflows were crossed right around the time where the first bear indicator popped up on the 1 day, right? On the 1 day chart. Then it was followed by the 1 week, and outflows ever since have been below, guys. Have been below. Even on the moments where it tried to come back up, if no bull indicator pops up, there's still red bars. And yes, it turned green there. It was short-lived, and this went ahead and faked out, basically. If you look at it, this is a fake out. It went from green to red, and then that downward pressure continued. And for as long as it stays below the midway point, there will be weakness. Once it crosses, like you could see here back in the 2020 crash, once it crosses, and as long as it stays above it, yes, there's going to be volatility, but as long as it stays above the midway point, the overall trajectory is inflows or outweighing the outflows. But right now, more money or more capital, you could say, is outflowing than inflowing, and it's going to take a lot of strength to bring itself back up and actually break through that inflow versus outflow like it did back at this point and stay above it. Right now, we are below it, and we have been able to see with inflow versus outflow and the bull and bear indicators and 42 vision, the full transition from the rip area, which is bright green, to the dip areas, which is white with red borders, how things have been moving on the bigger picture, and also even on the smaller time frames. So I stated at the beginning of the video, what is it that I'm doing? Well, on the 5-minute chart, I'm maximizing on all the moves. You can see right here, just between yesterday and today, the bear indicator, outflows were crossed. It went from rip area to dip area, from dip area to rip area, and it crossed back up. And same thing here yesterday, right? It opened up at the bell, bear indicator shortly after, went into a dip area, crossed the outflows. That lasted for several minutes, almost 30 minutes, and puts were up probably 50% plus. And then from that dip area, transitions back up. Inflow started to pick up going into green, and the real momentum did not start until it crossed the midway point. You can see it right there, shortly before the bars of the bull indicator. Continuation of strength, and calls went up nearly 100 to 200% plus at their highest points of possibility. And we have on our Discord different bots. Every single investor and member in the community is equipped with 42 vision. Those that want the inflow versus outflow, it's optional. You could choose that tier that gets you access. And within the volatility, we are continuing to look for opportunities daily. Whether the stock market goes up or go down, there's opportunities being presented every single day. I mean, you could see here on the date back on June 28th, when that bear indicator popped up, quickly went from green to red, crossed the outflows of the midway point, and it stayed all day below, full momentum to the downside. And same thing here to the upside, right? It went up really fast at the bell. It was under a bull indicator, full strength, and even when the red popped up, right, things continue to hold up because they did not cross the midway point of outflows dominating. If not, inflows dominated for most of the day. But when there's a lot of volatility like this, that's when it comes in handy to be able to see the transitions to the downside and back to the upside, and when they get crossed, and when things also slow down. You could see the slowdown there, and you could see the slowdown here, and then why things fell the rest of the day, because it crossed the midway point and stayed below it. And with all the headlines coming out talking about how this is the worst start and finish of the first half since 1970, and then price targets on the S&P of going as low as 3,200, there's going to be a continuation of volatility in my opinion. I've been stating this since the beginning of the year, and this is my perspective. I could be wrong about it, and this is not financial advice. This is just my opinions alone, but I believe that the volatility will continue, and within it, there'll be a continuation of opportunity. So let's talk about the supports that I'm looking for. The first one is down here at 324, guys. If it was to go that low, 324 is the lowest point right now that I'm watching. Now below that is 340, right? Or slightly above that, excuse me, below 360, 340. So that would be the next level I'll be watching if the 360s get broken through. And then 324 is a key level to be watching if the bearishness continues. And you could see here on the 1 day, even though it came back up slightly with green, it's pulling downwards because we're still below that outflow midway point, right? You could see where things got significantly to the downside. They tried coming back up, and we're still holding down because outflows are outweighing, and they were crossed back on June 10th and started falling on June 8th. So you could see when things are starting to move in the bigger picture, in the smaller time frames. Does not matter what style of investing one has. There's all opportunities with this clarity that 42 vision and the inflow versus outflow indicators bring. Now, a lot of people are also talking about, well, what if there's a bull run inside a bear market, right? Like, what if we have a bull run inside a bear market? Well, the last time that we had a slight bull run was when we dipped to 411. A lot of people thought that was the bottom, and we went right back up to 462. And that is something that could be possible, and we could see some type of run back up. But if it does run, it's going to need to break above 417, 420 to be significant. And if it comes back up to that level and it double tops and comes back down and rejects it, it's going to be very interesting, because every time it's came back up based off the inflows versus outflows, the highest it's went is 20 on the indicator, and then the average has been between 10 to 7, right? Every single time it finally gets up there and rejects. So I'm going to be watching within those levels how it comes back up on the 1 day, and then also on the 30-minute when that actually happened, that run earlier in the year. It was very short-lived, and it lasted for several days, almost weeks, right? So that's what I'm going to be watching for if it does happen. But it doesn't signify that we're out of it. I mean, look at this. It went upwards, and outflows have begun to happen, right? But it hasn't crossed yet. So that's why it's holding itself up. Anytime it hasn't crossed, there could be some slight pullbacks or consolidation in the process, but doesn't mean that it's going to completely fall, and it doesn't mean it has strength. It will take much more significant moves to go ahead and break to either side. And that's why the inflow versus outflow allows one to see when things are crossing and going into further weakness, or holding because they're staying above, right? Like you could see right here in this whole entire process, when it actually went ahead and fell, it was trying to hold itself up in that consolidation that day within the dip here in the middle of the day and bringing itself back up. And then once it crossed, it dipped back down, and then it tried bringing itself back up, held itself there, and then once it crossed again, and you could see it there, all that volatility, but not enough strength until today when it finally crossed above, and it significantly pulled away from the midway point from that level of consolidation up here, and as well as right there, until it finally pulled away upwards, guys. I look forward to seeing your thoughts down below. The key levels to the downside is going to be 340 on the SPY, 3,400 on the S&P 500, and the lower point will be 320, 4, and on the S&P 500, 3,240-ish, 50-ish, around that area to the downside, based off what articles are saying and what the technicals are showing in the charts. And to the upside, we're going to want to see things actually break out and try to get back towards 420, 4,200 on the S&P 500. As always, thank you guys so much for watching, and let's make